To better discuss, of course, the horizons of the market of commodities and minerals, directly Mr. Bhavik Mehta, Deputy Research Investment Products at Century Financial. Welcome, sir, and thank you for joining us on CNBC Arabia. First of all, if we are to better detail the record spikes that we are witnessing, starting with aluminium, where we have, of course, some record highs. Do you believe that, of course, this peak will be a short-term, supported by the weakness in the dollar, or could it actually stretch over 2026?
To start with, we are in the middle of a commodity super cycle. What actually started around 2020 late or 2021 starting, we are right at, I would say, the middle of the commodity super cycle. So it's not a surprise that we are seeing these kind of record moves in commodities. Specifically, we're talking about the metal commodities. We are seeing what's happening with gold, silver, copper, aluminium. Dollar weakness is the number one driving factor that is supporting this entire commodity super cycle. President Trump just commented that he is comfortable with a weaker dollar. That has basically meant that more people, more traders, and I would say the big institutional money that's ready to flow into this metal ETFs. So across the board, we are seeing a rally. And if we talk about specific commodities as such, we are more bullish on gold and copper vis-a-vis the other commodities.
Mr. Bhavik, when we look, of course, at the other minerals, we have witnessed that there are some historic highs when it comes to zinc. According to you, how do you believe that this might affect the industry, especially amidst the restrictions imposed by China?
Restrictions imposed by China have been the reason that you are seeing rally in metals like aluminum and zinc. But ultimately, see, what happens is, even if you have the weak dollar narrative and a commodity super cycle, markets at some point of time in this year are likely to react to the demand and supply dynamics. So amongst all the industrial metals, if you look, copper is supposed to have the highest deficit in percentage terms. So we are looking at a deficit of around 600 to 700,000 tons for the entire year. Zinc, there is a popular estimate that the market is well supplied. It's going to be well supplied till the end of 2026. So overall, aluminium could still hold, but zinc, probably the rally could cool down once the entire euphoric force is out of the way.
Looking at the other commodities, including wheat, which was affected as a result of the reduced crops and the climate change, how do you expect the impact of the drops and the weakness of the dollar, and do you believe this to extend to the second half of 2026?
Right. So historically, if you see, and across all the commodity super cycles since last 50, 60 years, metals have been the number one driving force as far as the commodity markets have gone. If you talk about soft commodities like wheat, soybean, they tend out to be more cyclical, more temporary price reaction as compared to the primary metals. So just to give you an instance, last 2 to 3 year period, that is after the Russia-Ukraine war, we are sitting on a record grain surplus, something around 3 to 3.5 billion tons of soybean, wheat, and other, the primary soft crops. So the markets remain well supplied as far as the soft commodities are concerned. The outlook would be more softer for soft commodities as compared to the primary metals for this year.
Now, going back to what happened in gold, we have witnessed, of course, the record highs during yesterday's session, reaching 5,600 USD. And this is something that's very important. And it was expected to reach 5,400 in the upcoming month. However, it has peaked earlier. Do you expect, of course, this peak until when will it continue? And when could we reach the $6,000 during this year?
It's to be very frank, it's very difficult to predict what could be the likely top for gold and even silver. Momentum is the key game that we are talking about, right? So what we are seeing since last 1 month, 2 month specific period is even a $30, $40 drop in gold, we are seeing aggressive panic buying amongst the market participants. What has really happened is markets have realized in some way that, the role of US dollar or even, the US administration, the US government under President Trump, it's not going to be a very global in the sense that because Trump has become very much pro-America, he's trying to look inward. We have seen what's happened with the trade policies. The markets, the governments all over have realized that maybe time to shift away from US dollar and get back to the core trades. So we're talking about rally in gold, we're talking about silver, and different nations, signing the local currency agreements. Now, where does this fit for gold? We are seeing large scale dumping in U.S. treasuries. So countries like India, Brazil, they have sold aggressively their U.S. treasury holdings. We are yet to see the empirical data whether the treasuries have been actually converted to gold, but the trends that we are seeing in the ETF flows, the bullion ETF flows, that definitely points to a scenario where gold momentum could still continue for a couple of months.
Finally, if we want as well to discuss some items, especially, for example, in India, where we have seen that we had, of course, a large demand today with the drop in USD, and in view of the weakness of all the metals, how do you expect the silver or the demand and supply of silver could be affected?
The current signs that we are seeing, despite the record rally in silver and gold, we are not seeing that much amount of softening in demand as far as the physical markets are concerned. Now, what would be really interesting to see is we are actually looking for what kind of institutional buying is actually holding up at such record prices. Now, what happens with retailers? Retailers tend to postpone their purchases. So it's not a thing where you're going to see big volumes from the retail flows itself. But the key for us that we are going to look at is what amount of central bank that is actually going to take place over the Q1 of this year. So maybe towards the mid of this year, we'd be in a better position to understand if, the record prices in gold and silver actually cool down the institutional demand. So that is one of the key that we are looking for.
Thank you very much, Mr. Bhavik Mehta, for joining us. It was a pleasure having you. Thank you, sir.
Thank you.